Ladies and gentlemen, boys and girls, we are back. Sorry it's been so long since we've done one of these, but you know who I am. You know this is Trader Merlin. If you don't, he's got his own channel. You should hit the subscribe button, turn the bell on, so you know when we're rocking and rolling. How was your week? I know you just went live on your channel, so I'm sure.
I had a great week. I had a great week. Really good week. I think as a trader, you appreciate when you're like, okay, here's my plan, and here's all the things I think are going to happen, and you put your trades into place. And you're like, okay, I'm building for this. We did a show on September 1st where it was like, okay, I'm shorting the markets, and I plan on staying short until the third week of October. I still have 20 left of my original position, but it's been just a great sell-off. Kind of went through my plan, and I sold most of it this week. I sold most, but I'm long puts, so closed most of my position this week. Had a lot of great trades. So yeah, cheers to that. Happy Friday. I had a great trading weekend.
Nice.
It's the thing as a trader. How about you? Was yours good?
That's actually what I was gonna ask you about, actually, because it's cool to ask another like experienced trader, because I've gotten in these phases before, and so I got stuck trying to buy the dip. Okay. And it was one of those, like, now I've taken just as many wins as losses, but for every $1.25 I made, I would lose $1. So losses were small, but
you're still making 25 cents.
Yeah, but it's like you just made pebbles the whole week. And had I just went short, kicked my feet up on the desk, I would have just absolutely killed it. And I've done this before with you'll look back a week later, it was just a channel down. But, I'm buying every dip. It pops up, so I'm putting my stop on the green. I start trailing it. It tags out. We're headed our way back down. I buy the next one. Sometimes it doesn't even do that. It just kind of goes smooth through it, which is just the nature of the game. But eventually I did just say, whatever, I'm going to go short. Okay. Still got chopped out in general. That one went green just like all the other ones and then right back up. And I was like, come on. So
basically what you're telling me is you're on the couch right now and I get to be your therapist. Is that what you're saying?
Exactly. And I'm glad this person just replied. He said there was an echo, but he had 2 tabs playing. Cool. Cause I was like doing that. Yeah. So like, how do you discern, or how fast can you avoid doing what I did? Because I say to my group all the time, it's like jumping out of the top of the tree and hitting every branch on the way down. It's better than just going splat on the floor, but some would rather just be in the lawn chair,
I'll give you a simple example way that I look at it. At least I kind of recant this to myself, which is in between my house and where I used to go to the office, I think I've got like 9 stoplights, right? I got 9 stoplights. And there are days where I hit every green. And on those days, you're just going, hell yeah, this is awesome, right? But it doesn't always happen that way.
Right.
Flip side of things, there's days where you hit every light. Not only do you hit them, but you get there, as you're approaching, they turn red. So you have to wait even longer. And I think trading's that same way. I think you just have to trust the process and know with your strategy, with your tactics, your rules, which you've been using for a long time. I mean, this isn't your first rodeo. Yeah. It's even though you know it, you've got it down, you got your strategy and plan. There's days where the markets just kick you in the teeth and go, oh yeah, you think you got it? Let me just mess with you for a while. And you just got to shrug it off and go, okay. As long as you don't lose big, you're okay.
Yeah. Yeah. And if you know my strategy, if you do that, it's kind of hard to really lose big unless you just purposely go out there, But when you swing for the fences, it's a home run or a strikeout, Let's hope you're Babe Ruth or something, I wish I knew a good baseball player that.
I'll give you a better example. Don't Babe Ruth, because Babe Ruth is in the Hall of Fame. Let's go Jose Canseco, right? Jose Canseco, he could hit that ball a mile, but he struck out so much and he was just a pompous jerk. So yeah, don't want to be Jose Canseco.
Yeah, much better analogy. So how can you looking back, how would you switch it? Because I had people in the chat. Now, this just because you're the one making content. There's people that just take trades because they're confident in you, more confident in you than they are themselves, or like, hey, he's going to catch this knife. I am too. So it's kind of like, we know it's not a call out service. We're just talking about what we do, but there's just some that just do. They agree with what you're saying, so they start doing it. And it's like I see them, I'm like, man, I say it all the time, like we're on the same boat, either Titanic or a yacht. We'll find out here in a little bit, but it just kind of seems like we're all just on the Titanic, just playing the little show at the end.
We are. I think the Titanic almost implies impending doom, so I don't know if I want to go that route. But you're right. I mentioned this today and over the past couple of days because, I talk about my trades. I talk about real money. I talk about actual trades I make, not like some traders out of Chicago that just give out fake levels and just say I made this trade psychologically. Like for example, I wrote an article for barchart.com, released that Tuesday or something. I sold puts on XLU, which is like a crazy one. Like that's totally catching a falling knife right now. And a lot of people are going, you're nuts, you're nuts, you're nuts. Well, that's cool. Don't take the trade, right? You don't have to do it. I'm putting my money on the line. I think that there's some potential opportunity here for XLU to the upside. And if it pans out, great. If not, then I will protect my position and defend that. And hopefully I've got the shared screen. That's yours. Yeah, I've got XLU up here too. But anyway, you look at how much this thing is. Oh, you get the same zones. My zone is actually just a hair lower, so I sold the $54 strikes. And
nice.
I know that there's people that follow my show that are now jumping on XLU, and I'm like, okay, first off, you got to be careful because you are catching a falling knife. You have one giant problem with XLU, and that is this. A lot of people buy utilities because they're getting that nice rate of return. A lot of time you get a yield, a dividend payment from utilities that's you want during retirement, right? So some of the ones I profiled in my article, they're paying 7% dividend. Well, most are going to pay like 3%. So XLU is paying, I think, 3 to 3.5%. Well, why would I buy XLU that's paying me 3.5% when I can go buy a 3-month T-bill and get 5.5%? So that's a huge risk right now. Is people are going to now. Why buy utilities? Money may come out of utilities because they're just looking for income. They'll go to the safety of buying a T-bill, and that could continue XLU to the south side. So while I'm positive on it, I think there's opportunity. Careful, this thing could still continue on down. And as a trade manager, risk manager, you got to protect yourself because I may be wrong, and I'm wrong quite a bit. I have no problem admitting it.
I do want to shout this out, Lisa. She's new to my channel. I don't think she's new to yours. She says. And I've never heard somebody say this, but I'm going to say this a million times over. So hopefully she doesn't get annoyed with it. She says, I always remember the size of my account before taking other people's trades. Couldn't have said that any better myself.
Totally.
Because I try to help out with that by like, let's focus on percentage. Because that's pretty equal, whether it's 100,000 or 1,000. But yeah, there are just positions you can't afford to take while everyone else is. And it kind of gets back into options. When I was buying like Amazon at the money, $16,000 a contract, I was bullish Amazon, but then somebody goes and buys $600 out of the money contract because all they could afford was $500. And, like I would have sold them that contract all day, every day, and this ends up being a completely different one. Anyway, I want to shout that out.
Yeah, I know. I like it. I think, the challenge is, and you have a subscription service, which is a little different than what I do, but you have people that are going to hang on to your every call, your every thought, your every idea, every little line you put on your screen, and they think that that's what it should be. And you've been through different schools as well. I'm a firm believer that you need to take what Don says, what I say, what Lisa says, what Pepe said, all these different people, and you mold it to fit you. One thing I just don't understand, in having taught for 20 plus years, I can stand in front of a room of 30 people and I can tell every single one of them, I'll draw a checklist on the freaking board and say, step number 1, do this. Step number 2, 3, 4, 5. And I got 10 steps. And by that Friday, everybody is doing something different. I'm like, how can you do it differently? I've just given you 10 steps. So it's just human nature, So you have to figure out what your strengths and weaknesses are, what your flaws are. I believe this is probably one of the most customizable things on the planet is your trading style. So don't think that Don's is the absolute answer. It's a foundation, a building block, and same with my style. I think you learn from everybody and craft what fits you best. That's the big challenge, I think.
Yeah, that's something I. One of the comments says, "Let's be real here. We argue with Don about his trades all the time." They do, which I do love. I actually love when I say like I'm taking this, and someone's like, "Did you see this or that?" And then there's like pushback. That lets me know like they are learning.
Yeah. Well, and you know what? And to be fair. There may be something that you didn't notice that all of a sudden Don brings up. He's like, what are you, crazy? Because you didn't notice it. You're like, oh, shoot. I did not even think about it. Thanks, Don. All right. Yeah. I might move on. I do the same thing with my audience.
I love the debate there because in the end, you both bring up your best facts and you both leave either, hey, knowing you got the full spectrum, you know what you're going to get into, or, man, I really didn't see that. That was going to clothesline me right at the bell, like, thanks. Okay, so what do you think about you touched on it? There was almost like a great segue. Bonds, because bonds are like it's the key word I think right now. Everyone's talking about bonds. Bonds are going absolutely nuts. Um, how do you feel about that? I don't actually feel like I know bonds, but if you told me to zone out a ticker and trade it, there's that I've been doing for a decade. Bonds, I'm like, nah, they're too boring for me, so I don't have that experience. But I get its key role in everything, though.
So let me put it into perspective. Let's say you're at a nightclub and you're with a bunch of your buddies, and there's this doorman, the bouncer, and he's 7'3", 400-pound rock of a man that you're like, you're scared shitless of this guy. Mm-hmm. That's the bond market. The bond market is so much more powerful than the equity markets. If you think about what's driving the bus, the stock market isn't its island that says, we're the stock market, we'll do what we want. Bullshit. It's currencies and bond markets that tell the equity market exactly where to go. Yeah. So while I don't trade bonds, you have to look at the bond market and say, what's going on there? What's the bigger trend? Because if you can catch the big trend on bonds, then catching the trend on equity markets is easy. I would argue with currencies as well. And right now you have the US dollar surging. Okay, that hurts markets traditionally. That's usually weaker for equity markets. And then you have the bond market is ripping to the upside like we haven't seen since, well, go back decades to the 80s, which led to the crash in 87, by the way, which I think may happen. You know, I don't know. I think that any trader, you have to be looking at this stuff, especially when you have a trend that looks like that. Yeah, you got that dollar index on there. I love the fact we have a shooting star, which means that next week I'm expecting a retracement in that dollar index, which could be a bounce for equities. Yeah. But overall, that's 11 out of 12 weeks that the yield has gone up. And not only has it gone up, it's gone from, let me put weekly here so I can see mine. Just to put it in perspective, the cost of money has gone from 3.5% to 4.8%. So it's a 1.3% increase in, well, that's kind of weird. It's not giving you the screen. Yeah, it's not giving me the chart I want to share. Window? Let me see if I can, 1 second. Let me see if I can share that screen with you guys real quick. Share screen. It should be the entire screen. There we go. That's what I meant to do.
Okay.
There we go. So, you know, if you look at this, this is the cost of money, everybody. This is from 2020. The cost of money went from, let's call it 50 basis points, 0.5%. And it just keeps on going and going. The higher this goes, the more the market, the more it slows things down, the greater the cost of capital. Any business that's looking to expand and build infrastructure and build factories, those costs have gone from 0.5% to 4.7%. And it doesn't look like it's going to stop anytime soon. So to me, you think about what's the greatest pressure pushing these markets down? It's bonds. It's going to keep on pushing. So stay short.
But so what's going to drive this thing back down? Like, so we know supply and demand with stocks. We know buyers are going to step in. We know supply. Hey, hopefully there's some big block sellers coming up. What's going to be the reversal? What's going to cause this red candle? What's the behind the scenes action that's going on?
There's always like ebb and flows to buying of bonds. But the big reason why you're seeing this go up is right now we have record amounts of debt in the U.S., right? You have $33 trillion worth of debt. Crazy. And by the way, we added $256 billion in one day a couple of days ago. So we're going to be at $34 trillion in no time. It's unbelievable how much debt they're putting on. Where do they get the money to pay the interest on that debt? They sell bonds. That's what the 10-year and 30 years are, them selling bonds to collect money to pay the debt interest. But because it's surging so much, and because we got defaulted by Moody's, right? Moody's defaulted U.S. government debt. Our debt rating went down. The yields have to go up at that point because now there's a lack of confidence in the U.S. government's ability to pay. Now, I don't have a lack of confidence in our ability to pay. We'll just keep printing money. What I have a lack of confidence in is the amount of debt we're putting in. At what point do we start to have a financial debacle? What time do we declare bankruptcy as a government? And that, to me, is the problem. Why are these yields spiking? Because now our Treasury has to sell more and more and more to cover the interest payment that's due. So when you flood markets with something, bonds are inverse. So if they continue to sell tons and tons of bonds, you're flooding the market out there. You're going to have to offer a higher yield to convince people to buy those. And that yield's going to keep on going. And keep in mind, we're inverted right now, too. So this should get back to normal. I target 9% 30-year fixed rate mortgage by the end of the year. Crazy.
You got the 30-year charted out?
I don't. I do the yield curve like this. So let me show you the yield curve. This is the 10 and the 1, which is what I have a guest on the program, Bill Addis. So he'll talk about inversion. This is the rate of inversion. So we've been inverted on the 10 and the 1 since July of last year. Many of you know this one, which is the 10 and the 2. This is what like CNBC and all those channels use. We are still significantly inverted, meaning you'll earn more money by buying a 2-year than you will a 10-year. That's broken. So what's happening is because that short end of the yield curve is stuck at 5.5% right now, it's not going to move until the Fed changes those rates. Probably not going to happen for another 6, 8, 9 months. And if it does, it might actually go up. So what happens is that long end of the yield curve, to get normal, needs to go higher than the short end. So you're talking this 10-year bond, that 10-year bond is probably going to get back up to 5.5%, 6%. And that's going to choke out the economy even more. If you listen to Bob Pisani, he was on CNBC, which I don't watch, but I caught a clip on YouTube. He's a sharp cookie, and he's basically saying, you're looking at bonds getting up to 13%, 12%, 11%. Imagine what that's going to do to the housing market if all of a sudden your mortgages are 15%. Now, it happened in the 80s, but it's going to grind things to a halt.
Yeah, I was going to say everybody older than me that's like their normal. Like everyone's first mortgage was 18% that I know. I think. Oh man, so so that quickly almost unravels you into a like any further, it's going to be a shiny tinfoil hat and the market's going to crash. Black swan event. Now I know I can see the writing on the wall for banking trouble, and but how? I guess where's your guardrails to keep you like in check? Where's if we continue this path, things are going to get rough. But who comes in and saves the day? Whether it's an ongoing excuse from the government, how do they kick this can down the road? How do they stop it from just? How do they stop this from not just being the top of that spiral and we just start spiraling down? Because you pick up momentum in that case.
Yeah, I mean, look, there's a lot of different things that are going to kind of keep this thing going. The big part is you got to stop spending, right? And again, this is not a Republican or Democrat thing. I don't want to polarize anybody here, but you look what happened with the ousting of McCarthy, and keep sending hundreds of billions of dollars to Ukraine. Look, I empathize with the people over there. I do, but do the United States need to be the police force for the entire world? That's a debatable point. I'm sure that'll spur some opinions in the chat, but I'm not trying to be political. It's like saying we have bigger issues here in the United States we should deal with. So instead of sending $500 billion in aid to other countries, we could pay off a boatload of our debt and put ourselves in a point where we actually potentially have a surplus with regards to our deficit. We could also start doing massive cutbacks where I think we really should be doing home, right? Do it home first. Once we do that, then all of a sudden we start to release the burden a little bit on our long-term mortgage debt interest payments. So, that's the first part, is to stop spending. Like if I was to ask you and you told me, oh man, I'm in a real financial spot, man. I got so much debt and I owe this money here and I got all my credit cards are maxed out. And my first response to you is going to be, well, stop spending, sell your shit, right? Go on eBay, host a garage sale and sell your stuff that you're not using and curtail your expenses. And unfortunately, the most mismanaged business in the world is the U.S. government. I mean, it's sad to say. I love my country. I love America, but man, our government it's garbage. It's just they want to keep spending and they will continue to do so. A few have stood up and said, let's stop this. But remember, as soon as they stop spending, that's layoffs. That's people being unemployed. And those people now scream to bloody murder that the politicians did this and they don't want that on their conscience. So they'll just keep spending. Yeah,
they're kind of in I don't know, maybe they brought it on themselves, but they're kind of stuck between a rock and a hard place on that.
Totally.
Yeah. And so Dom even says the real problem is that our money in Ukraine isn't doing any good. He says we either go to war or we don't. That's kind of where I sit. Like if we're going to be the world police, it's a 2-week thing. Like who do we got to flatten and move on? And then, it's like putting a Band-Aid on Ukraine while we have a bullet hole that probably needs some attention to it. We're just.
Right. But the question is, do we need to go to war? Right. Because if we go to war and we join this, then all of a sudden you're starting a war with Russia. And then all of a sudden China gets involved. And now you're talking World War III. Do we really need that? Is it really that critical to the stability of the United States? I would argue not at all.
Yeah.
Is it a humanitarian issue? Is it a freedom issue? Is it a liberty thing? Democracy? Sure, absolutely.
Mm-hmm.
But from a trading perspective, whatever, it just adds more market volatility. But as a human, yeah, you want to help out. But why don't we start giving more money to shelters to help homeless military veterans, right? And do more medical aid to military veterans who have PTSD from being shot at and taking bullets for me and my freedoms. That to me is more important than sending hundreds of millions of dollars to countries that a political alliance with. Let's make our country better. And unfortunately, I think our elected officials don't see it that way. But
yeah, I think
we're going way outside the scope of trading now.
I was like, all of our officials are just kind of just joking around at the office, I guess.
Yeah. They just want to get paid, man. Those guys want to do whatever they can to keep their job. And unfortunately, there's one politician who I don't align with any party. I take viewpoints from both of them. And one, I can't remember his name. Somebody in chat probably knows this one. But the guy stood up and he goes, listen, I'm sick and tired of you guys taking money from lobbyists. I propose that it's illegal for senators and elected officials to take any money from any PAC or organization that's trying to sway you. I don't take a penny. And you're not allowed to trade any stocks. You can't short the markets. I'm going, that sounds awesome. Right? I think a lot of people would actually quit politics because the money's just not there for them.
Yeah, I've actually had that conversation on this channel a lot because people say that's not fair. And I've actually been to their defense saying like, that's just part of the game. Like you go into politics knowing that you have like your little W-2, but then you have your real money's on the side. Like you don't take Pelosi's position knowing you're going to make $200,000 a year. Right. You know, going in there that Google is going to be paying you for speeches, but like, I would agree if we could just that's just legal bribery is all that is. It just needs to be all flat out illegal. Yeah. Like,
and I wouldn't say it's the Google giving speeches. Like, here's where my real problem was. You have elected officials who are key that sit on boards of like financial reform. And this was years ago. I think it actually was Nancy Pelosi, who was sitting on a board for credit card reform years ago. And she was the deciding vote. And this would have curtailed, in my opinion, the usurious charges that credit card companies are putting on people. Like if I charge someone 29% interest for a loan, I'm considered a loan shark. I'm bad. I'm an evil person. But if you're Visa and MasterCard, totally fine. Keep doing it. To me, that's wrong. So credit card reform would have put a cap, let's say, 15%. Still making a ton of money for Visa, but a little bit less burdensome on me, the consumer. Mm-hmm. And instead of voting yes for it, this official voted against it and shortly after received a whole bunch of shares of Visa's IPO. and to me, that's a problem. Like your job is to do what you need to do to make my country great, regardless of where I live in my state, what my ethnicity is, what my religion is, make this place better. And I don't want to say make America great again, because I think that's polarizing and silly to say that. Yeah. But in reality, we do want to make this the best country on the planet. And to do that, you have to make the right choices for this country, not for your pocketbook. And that's our problem, because they will be swayed by those politicians. So drive me nuts. All right, we turn this into a government show. Let's go. Let's get away from politics. I hate politics.
Yeah, Lori says she wishes the two of us were in the country. I promise you guys would not want me running the country, because it would be I wouldn't need 8 years. I don't know if I'd need to finish my first term before I had this whole thing wrapped up and done. Like if you had the power to make changes, we could really make changes. Unfortunately, you have so many people that are conflicting. You're never going to get anything done. So I wouldn't want to do it either. I'd be so frustrated. Oh, goodness gracious. So, okay. So what's your outcome? What's your thoughts on, so we've heard about recession, like the last, 2 years now? It's like every 6 months or quarter, it's like the recession's next. It's like the debt ceiling just keeps getting pushed out, So now the recession's going to be in 2024. How do you feel about that?
I think so.
Think so?
Yeah, I think that things are going to slow down. I mean, you can't have. So one of the things I learned when I started trading back in the 90s from one of my mentors, we had Alan Greenspan, and that guy was doing crazy raises. And every time he'd be like, they raised 50 basis points. Like, oh my God, what does this mean? I'm fresh out of college. I still didn't know squat about. When they raise 50 basis points, that's going to have a dramatic impact on the economy. It's going to have a dramatic impact on stocks that are resulting from the economy. But it's not going to happen for 9 months to a year down the road. Keep in mind, we have been raising aggressively. There still are a lot of impact from rate increases that have yet to hit the market. Jerome Powell even said it at the last press conference. He says, we've yet to feel the full effects from our tightening actions. And I'm like, yeah, you still got like another 6-8 months to go before all of that is filtered through to the bottom line. So as Lori says, I'm waiting for the black swan event. Yeah, I think it's coming. I think that there is a good potential. And October is notorious for it. I had a chart somewhere, but I don't know where it is here, that shows the run-up in interest rates and equity prices during the 80s. And then also what it looks like today. And they're almost parallel to the stock market crash of 87. It's like, oh, no, that doesn't look good. Now, look, I'm not trying to be a doom and gloomer. It's just when these markets are in a situation that they're in, which in my mind, you have the perfect bubble. You have a housing bubble, you have a bond market bubble, and you have an equity market bubble. It's one thing if one of those pops and triggers the other. It's another if they pop simultaneously. And it feels bond bubbles absolutely blowing up right now.
Yeah.
The equity market's slowly rolling over. I mean, I look at this S&P. This isn't the end of the world. This is just showing some weakness. And particularly over the past couple, we got my charts a weekly. We know over the past couple months, it's getting weaker, making some low. I look at this and I think there's the potential for this to drift lower, even though the weekly looks like we're getting a bounce next week. It's not making higher highs. So I'm definitely in the bearish camp here, but I'm not in the apocalypse thing. I'm certainly not in the we're going to hell in a handbasket. But I mentioned today on my show, I said, could we get to the point that we have a black swan event, which in my mind will probably be triggered by a combination of these bond yields rising. I think it's actually going to hit another bank that's going to be a bigger bank this time and maybe trigger a couple of bigger banks. Because remember that what got Silicon Valley Bank and Signature Bank into trouble is borrowing customer deposits, paying them, 0.5%, 1%, and buying long-term maturities and getting, 2%. So they're making very little difference. Now, all of a sudden, those long-term bonds, the prices of those bonds have cratered, and now they're forced to sell them at a loss. They go bankrupt. So I think because of the rate of ascent of the yield of the 10-year and just the bond market in general, you're putting a whole nother burden on the financial sector. Yeah. That combined with the high yields, it just feels like something's coming.
Yeah. See, and like I said, I'm not a bond person. That's why I kind of want to even have this conversation just, on stream, because people keep asking me about bonds, and it's very clear to see something's up. Like, this isn't normal. This doesn't look right. See, my feeling has been in the financials. If the banks, because I've kind of been tempted to buy the dip a while back. If you guys remember, I was bullish, and I had bought Bank of America. I had bought JPM. Bank of America, I had sold, so I have the account that everyone can follow. Even Bank of America sold that a bit back, and I haven't bought it back. And just because it just kind of feels like if there is going to be a straw that breaks the camel's back, or the leg to the tripod that comes out, I do think it's going to be in the banking sector.
Yep, I agree.
And then,
there's a good comment here from Rusty Golfer. He says, "Who really cares if it dumps? I make way more when you're dumping." 100%. I love it. That's selfish of me because I'm a trader, right? I'm a trader. I'm an investor. So I will position myself to capitalize on it. And as my viewers know, right now, I'm majority short. I'm long metals. So I'm heavily long silver, which is also a very speculative at this moment, given what's going on with the dollar, right? But I look at those factors that are going to keep pushing this thing to the downside. Great. Let it keep dropping. Who I feel bad for is those who are nearing retirement, because you probably bought yourself some bonds. You are in a situation. You probably bought TLT. We talked about this with my guest, Bill Addis, yesterday. Yeah. Most people are taught that bond markets are stable. They should buy bonds, right? Look at this drop. This is TLT. If you go back to the 2020 lows on the bond market, TLT is down 52%. These are freaking bonds. These are supposed to be safe. So anybody who's holding those in their long-term retirement accounts getting just eviscerated right now. It's horrible. So I'm definitely feeling bad for some people. But then again, caveat emptor, buyer beware. I think you should definitely look at the markets and see what it's telling you. Right now, in my opinion, the markets are telling us that we'll probably continue to drift lower. Do I see the black swan happening for sure? No. But over the course of time, you've been trading long enough. Every now and again, we get one. And you start to see when it hits, it comes out of nowhere. And right now, I don't feel like people are thinking black swan. I think people are thinking soft landing, soft landing, soft landing.
Yeah. If everyone's talking about a black swan event and telling me this, it's kind of like, did you hear about all the conspiracies the other day with the alert going off?
No.
Uh,
The alert.
You saved yourself. There was a national alert that's going to go off.
Oh,
yeah.
yeah.
Yeah, and well, that was going to trigger a new chip that's hidden in your phone. It's going to trigger the microchip they put from the Rona testing in your face. I don't know if you get cancer or turn into a zombie, so I'm not sure, but it was nuts. And I was being sarcastic. Like, I really appreciate that the CAA, they let us know it was coming, because usually we don't know about these things in advance. Kind of like Black Swan events. Like, if everyone's talking about it, like, it didn't got to be there, and it's certainly not something that's happened before, because like the housing market crash, we put laws and things in place to make sure that doesn't happen again. So it's typically something new, and everybody talking about Black Swan events is usually talking about something that's already happened.
Great.
But see, now the reason to bring all the way back to the beginning, so we're kind of in that channel down as far as like the S&P goes.
Yeah.
And I got bullish looking just for that little leg up. So I'm kind of hoping next week is bullish. I'm looking for the bounce there just to get that leg up and then go short. We can continue that leg down. And it kind of coincides, like, does everything just like, because this trade almost looks obvious. The dollar looks like it's going to pull back, which would be good for the markets. The markets would pop up. We would stay in that trend down as far as the markets. So we could have, Monday, Tuesday, Wednesday could just be crazy bullish, and we're still in that downtrend as far as like the S&P goes.
Well, I'm a candlestick person. Like, I look at this chart right here of the candle that formed today on this week on the dollar index. I mean, this is screaming for a pullback, which means bullish for the markets. You look at the S&P, it's the exact opposite, right? So I'm with you. I think that you're going to have a bullish move up, but I don't think that this is, here we are. That's why the picture I used for today's show is ticker tape parade, and people cheering and celebrating. One good bullish day or 2 or 3 bullish days doesn't erase months of weakness in the broader market indexes. And, I'm not, again, I don't think that this is the end all. I don't think we'll be down 50% from here, but if I am in a position long term, I need to start thinking about my stop losses and potentially opening some short positions for it.
Mm-hmm. Yeah,
I'm also buying things that I think are very speculative. One of the ones that I got some grief on from people is Target. Everyone's like, "Oh, why would you buy Target?" Look, long term, I'm fine owning Target. So I was selling the 105 puts. It's right there right now. I still got 2 weeks left until those things expire, but I collected some decent premium. I'm okay with that.
Yeah. What did you collect on the 105s?
60 cents. Well, I got myself a little over 1% for 3 weeks. It was actually less than 3 weeks. So I'm okay with that. It looks like garbage right now. Here's your daily. It looks like garbage.
Mm-hmm.
But this is the catching the falling knife. I look back and there are some spots over here that go way back into 2020 where, all right, I'm using that as a small demand zone. I wouldn't say it's strong. I'd rather buy it at 90, to be honest. But I think long-term Target will be fine. And this thing was $261. Now we're at 105. And everyone's like, oh, it's because they would, hide your penis underwear or whatever the underwear they have. What was it called? It's literally a pair of underwear. It's a tuck underwear that they have.
It came like a little card to teach you how to do it. So, I'm 35 and I don't know. I've never done it before. So how do I know if I like it or not?
I'd love to see the sales department like, you know what? We should get some tuck undies in here. They're really flying off the shelves right now. I don't know. I just think that it'll be one of those things that goes by the wayside, just like, Anheuser-Busch. Mm-hmm. I did an article again for Barch on this one, and I still am longer term. I'm bullish on Anheuser-Busch because it's a small percentage of AB InBev's money is Budweiser. Mm-hmm. They have 500 other beer brands, right? So you look at the U.S. market, people were in uproar, and I got to watch Kid Rock shoot an M16 at a 12-pack of Coors Light or Bud Light. Who cares?
Yeah,
there was pictures recently of him drinking Bud Light.
Also, Bud Light still got their money for that, whether he drinks it or not. So
exactly. It's funny, people literally buying cases to destroy it. It's like one of my favorite comedians is Ron White, and he's always got his cigar like this and his whiskey in his hand. He's like, "You can't fix stupid." I feel like that's the case with this sometimes.
You really can't. I'm gonna show you my target chart because I actually I'll be interested at 95.
I'm there. I like that. 90.95. This is catching a falling knife and being a bit aggressive, but I'm okay with it. But I agree. 95 is a better price for sure.
But this is almost like a mean reversion. So I wanted to show everybody, because I've been talking about this for a while, was 2020 and 2021. That's just not how markets work. It's not reality. But I think a lot of tickers are doing this or have already done this. Like, here's the hype coming in. They're sucking it all right back out. We're going to get back to reality. We're going to close that chapter, right? Close that book, and we're going to get right back to this, where Target pushes up $1 that day, and it's a good day. You know, like the S&P moves up 50, 75 cents. You know, and everybody's like, yeah, what a great day in the markets. You know, we went up 0.5%. That was a great day before all this I'm just going to call it nonsense. All this hype came in.
Yeah.
Yeah,
it was money. It was not nonsense. That's stimmy checks, right? That's people staying at home and not spending money. And all of a sudden it's like, oh, like Target's open, just wear a mask. And you're spending all your money in Target. If they close down, what pissed me off about this is Target was okay to stay open because they were deemed essential. But the local mom and pop hardware stores, the local mom and pop grocery stores, the fruit stands, they were mandated to close. So it's like our government really shut down small businesses and benefited Walmart, Target, Kroger's, and the big stuff. I think that's absolutely wrong, especially in hindsight, looking back at COVID, going, come on, really? We did all that? So they benefited from these stimmy checks and people kind of being forced to use Target.
Yeah. Yeah, I mean, that's our whole – we're going to get right back on that, on our system tangent. What do they call it when if all you have to do is pay a fine, that's not illegal. It's just legal for rich. It's just legal for rich people or illegal for poor people. There's a saying like that. Like, if you broke a law, but all you have to do is pay a fine, was it really illegal in the first place, or does that just mean the upper class are the only ones that can do it? You know,
exactly.
Like speeding down the highway, I can afford the ticket, and I do speed, but you know, like if you can't afford, you know, $400 a pop for a ticket, can you really do that? Was it really illegal for me, or was that because I call them admission slips for the ride that I just went on? It's really kind of well, that's a good example, or not, but it just kind of seems like
you can all go for rides in Don's Tesla or Corvette or whatever he's got now.
Yeah. Yeah, it just kind of seems like that. Once you get big enough and you have the money and you just kind of have that pull, the rules are different.
They are. But I mean, I think there's just tons of opportunity, honestly. There's so much right now that I think is setting up for actually easy trades. I mean, the short trades have been the easy ones, in my opinion. The question that you have to ask yourself is this the time to be buying things at a pretty steep discount? Like, for example, you look at utilities. Utilities are way down off their highs. You look at, specific segment pieces, like we're talking about some of the financial firms. Well, personally, I think it's a little too risky for me to look at XLF or any of those components in there, just because I think we're going to see another shoe drop in financials. So I'm going to shy away from that. But like utilities, we know that if you look at sector rotation models, when you start to have the markets roll over, utilities tend to perform really well. And I'd argue that we're in that moment right now. So I'm okay catching that falling knife, even with the issues at hand with regards to interest rates. Coca-Cola is another one. You called this one out today, didn't you?
It was yesterday. I bought Coca-Cola yesterday.
Okay.
I originally wasn't going to, but then just staring at it more, this is a dividend one for me, so I bought more. But what stood out to me, and I wanted to get your opinion on this because you brought up Budweiser, because those all kind of sold off together. More importantly, Coca-Cola and Pepsi. And did you see like the leading excuse for why that sold off?
No, I didn't see that.
Walmart said sales are down, and they're claiming it's because of appetite suppressants. So
I did hear that's.
So out of everything Walmart sells, the one thing that's down is Coca-Cola and Pepsi.
Yeah. What about more Oreos and Doritos? All right. Do I have to short Constellation brands? I mean, what
I checked Tyson out. I said, all right, if Tyson sold off today, I'll believe it. But the fact that just those two sold off, and that's a drastic sell off for something like Coca-Cola.
Oh, big time.
So
I mean, you go back the last month and a half on both Coca-Cola and Pepsi. I mean, it's brutal. And again, this is one of those things where you have to say, do I want to ride the trend and go short and capitalize on the down move, or am I a longer term swing to position trader who feels like this is way overdone into an area of demand? I'm okay owning it, right? And I don't know whether you bought outright or you were selling premiums on it, but I'm fine with that one as well. And I was actually looking at Coke. Coke came down into it went actually past an area I had mapped out as demand, but still, all in all, decent spot.
Yeah, it actually gapped down, and then recovered today.
Yep.
So purple for me is a weekly chart.
Okay.
But yeah, and that's kind of where I'm at. So right now I quit doing any so this week I made money just from off of selling options. Like that was because, again, as far as trading goes, one loss, I'd win two, lose two. Like that's how my week was. It just astonishing. So all my money to this week was just collecting premium off of everything that I've sold. That was a great week for Theta.
Yeah.
But for
I
the
did
rest,
as well. I sold some 19 puts on SLV and collected that premium as well. I mean, the move that happened the tail end of last week and into this week was just like, holy cow, with silver. I'm fine owning silver long term. I got no problem at all holding that thing long term. And as my viewers know, I already have a very significant size position in SLV shares, but I buy them and I'll sell covered calls against it, and fine. I'll just keep doing that wheel strategy with silver. Has been working fine for me. This week, my biggest gains were going directional. I've been long puts on IWM. Unfortunately, my SPY got stopped out a couple weeks back, but from September 1st through today was great. I had 80 Russells short. Now I have 20 left. So, of course, I wish it would have held it longer, but whatever. I'm not looking to gift horse in the mouth. So, but it changes. Like you say, this week for you was selling and collecting premium. Great. I'm sure there's other weeks where you're going directional or doing different things, whatever that market gives you.
Yeah. I had 2 come back from the dead. So out of the 3 markets that I trade, the Russell, the NASDAQ, and the S&P, I'm in calls, the Russell and the S&P. Not NASDAQ, which just
the one that rocked.
Yeah, it explodes the next day. So, but I buy them early. I buy them before the red candles, and they drop down, and I'm down 50% on these calls. And I even told my chat, because I bought it risk and capital. I said, hey, this thing's going to zero, or it's making me money. That's that. The next day we were just down again, and I was like, man, I just don't see this recovering. I was this close to closing, and then this morning they're down, and I'm like, wow, we could still come back. And then so I don't even check my phone. By the time I do it again, they're up. I'm like, this is insane. Like they just got the memo that the market was open and then ripped up. So I ended up making money on those. Were directional trades, but they expired today. Okay. And I think I grabbed them Wednesday, maybe Tuesday Russell, Wednesday was the S&P, and then it just went for it. So I was telling people in the chat, like, it's time to manage these things, because who knows if we're turning around. So I put that trail in, and it ended up being a great day by the end of the day. So I don't know who forgot the market was open and just remember. Oh, never mind. We reined it back in. This is a play I take all the time as far as expected moves. We get outside the expected move, reined it back in. So that play just panned out just fine. The S&P never got outside, though. It just decided to wake up one day.
That will happen.
What a day. Yeah. So hopefully next week does continue. I know the bonds are closed Monday, so I'm kind of hoping we drift up, and I want just a leg up like this. Just give me till Wednesday bullish. And then the things that I already bought, it's going to suck because I'm in shares on a bunch of things. They'll be up, and I'm going to want to lock that in.
But I bought you sell calls against it, or?
Oh yeah. I told my chat too, if I have 100 shares of anything, the second I get to that 100 mark of anything, I'm gonna sell stuff against it. It'll still just be tempting to just trail it, lock it in, right, and get back in. But I think for the rest of the year, I'm just going to be in a accumulation phase. That's what I've said. Unless someone can give me a convincing story not to. It's shares. That's why I said I'm not doing options. I don't want to give myself an expiration. The one thing I do want to buy is the Russell. I know this is ignore all the zones, but
good.
This charted area down here, imagine that's one giant zone. So this maroon area, this top would be like a type 1, this one down here type 2. I'm thinking about going 9 months out on a leap, and it really just because it's horizontal.
Okay.
And so that's what I'm thinking is we get down here. That's why I originally bought those calls in the first place, but I want to go 9 months out, so I don't have to worry about the next day or next week. And just kind of take advantage of I don't want to get chopped up and lose it right here. I want to take full advantage from bottom to top, and hopefully the Russell just continues to do that, because I've made a substantial amount of money just trading the Russell, because Russell loves to go just horizontal and just stay there.
Yeah, Tom is one of my regulars. He's just spread trading that thing all the time. He loves it. I love it as well. I'm obviously looking for those different levels too. I'm more of a directional. I like going directional, but and collecting premium along the way. 9 months, I don't know. I do think that we are going to drift lower. My initial forecast for January, I do it every year on my show. I ask everybody who's watching, what's your forecast for the S&P by the end of the year? I can't remember my exact number, but I have it written down as everybody else's. And, my forecast was bullish Q1, sideways Q2, bearish Q3, bearish Q4. I was wrong. Q1 was up. I was right. Q2 was up extremely. I was wrong on that, but I've been right on Q3, and I think I'm going to write on Q4. I think that it just doesn't have the catalyst for more upside move. You're hearing about the need for more reform and expense cutting in government levels. You're looking at the dollar surging. I just feel like there's more pressure. So I don't know if I would be buying calls now. If anything, I'd be looking at the very bottom of that range, which is 1650, which is the kind of the number I was looking at. Maybe you go and you're buying puts way out of the money at that price. Now it's not the best time because obviously we're down so much, but I don't know. It's funny because I feel like I'm kind of taking the opposite side of your trade. How about you? I'll sell you your leaps and you buy them from me. How about that?
Well, the reason why I'm going leaps, we don't want to do this again, Merlin. You know I'm right. But I want to go 9 months out because I'll do poor man. I'll do calendar spreads on it all day long, so I'll still collect premium on it. So if it does drift lower, it's just going to suck. I'll obviously collect less, but I want to give it time. So if we do run into something like that, that's why I want to give it 9 months. Otherwise, I would just go, 60 days, something like that, and kind of take full. I would make way more on 60 days, but 9 months would move considerably slower and give me some wiggle room for error on that one.
Time will tell. That's the beauty of the markets. You can be long, I can be short, and we can both make money.
Yeah. I will say, as far as the S&P goes, this top bright yellow zone, this is where my story started to change. Because, like you said, hey, what's your thoughts on the end of the year? And I said, investors aren't going to make jack. Traders are going to love this because we're gonna chop around. There's going to be some nice moves up and down. Said that January, I stuck to it. People calling it all-time high. I said you're crazy. And then we got above this level, and I was like, okay, stop. Why do we just keep going up? So I started to switch gears. So if we do sell off and kind of get back down to here, then I go back to January and I say I was right all along. But right here, right above this bright yellow zone is where I was thinking man, are we about to do something weird? That's kind of where I'm at. I think after a move like we saw right here, and I say this all the time, when things push up, they pull over or they pull back, and we've got to eat some time off of things and let some things grow into positions. I think we got ahead of ourselves as far as the markets go.
I think so too. That's why I think we're headed lower. Before I got to wrap up here. I got to get here by 5. But Lori says, can you guys both talk about JEPI and your opinions? Are you familiar with that? Do you use it?
JEPI and JEPQ?
Yeah.
Yeah.
What do you think about them?
So I actually really like them. I know they're brand new. And I just had this talk last night with my group too about dividend stocks because they're typically around that 4% mark. Anything that starts to get a little bit higher than that, you guys check how long have they been paying a dividend. Why are they promising so much? You'll see those that offer this crazy dividend. Typically, it's like collecting rent from someone with a credit score of 400. It's very spotty. Are you going to pay me this? Could we,
Yeah. I mean, they're essentially just doing, I have one of my strategies and one of my actually multiple accounts now is just a 1% strategy where I'm just selling puts, collecting premium. And that's pretty much what they're doing. These guys are just selling options out of the money and collecting premium. And I think they're getting almost 8% yield right now, which is great. Fine. I don't know. I don't buy into those. I'm one of those manual people. I like to do it all myself. So I would rather just make the trades myself. I get off on that. I really do. I mean, I'd rather trade than buy something that's doing it for me. I like the excitement of selecting the strike prices and picking all the levels and doing all that stuff. But I have no problem with them. I think that, they're pretty cheap with regards to fees. I think JEPI is probably under 0.5% fee. That's fine. Great. Yeah, no problem for me.
That's what I say. They're fairly new. I like them. I like them because when I found out they were holding stuff and selling calls, they're selling out of the money stuff. I had a trading bot that does that. So I was like, these guys are speaking my language. So yeah. I obviously don't have a substantial amount there, but JEPI and JEPQ, I think it's pretty rare for something like this to launch and be as successful as they were. Because a lot of times there's just that hype driven, it kind of just the new shiny object.
Success was the yield. Everyone's like, oh, you're paying 7, 8, 9 yields. I'm in, right?
Yeah. Mm-hmm.
But so are some of the utility stocks I was looking at that are paying 12% as well. So, but this was safer than some of the utilities, I think.
Yeah, or they haven't missed a dividend yet. So I think that's as long as they keep this track record. I actually really like them. I want to be careful because I made a video about it. I was actually really pumped about these, but I don't want to hype somebody up and then find out it's going to end up playing out like some of those other ones that promise that crazy dividend that it never happens.
Agreed.
Yeah. QYLD. I don't think I've ever had that one. If I have it, it wasn't long. I know they do it on. They're the covered call for the Qs, right? Yeah, the
Yeah, it's
NASDAQ.
100. Yeah.
I don't know why I'm not a fan of this one. I guess it's been around. Maybe that's why. It just kind of fades down. I don't know. How do you feel about these? This one compared to Jeppy?
In principle, I like it. I have some friends that are doing. One of my guys that's actually comes on the show regularly, Corey Lane. He's runs a hedge fund, and this is essentially they're doing the same thing, right? They'll buy some underliers, they'll sell calls against it. If not, they'll be outright just selling puts and collecting premium. They're targeting a specific rate. I think actively managed. I think it's a great strategy. Now, of course, Global X I don't know about, but JP Morgan is the one doing Jeppy and JEPQ.
Yeah,
fine. I think it's a great strategy. Again, it's almost like having a driverless car. You have to trust that vehicle to do what you want it to do. It's not for me personally, just because I like to do things myself. I like to get my hands dirty. I don't want to have somebody do it for me. So I think it's actually something that's probably good to have in a portfolio if you're a long-term investor, to add a little chunk into this. So you're getting those dividend streams, just know what it does. And it's not risk-free. It's certainly not risk-free. If you are doing the wheel strategy and you're selling puts, there is a potential for you to get caught off guard on some of these pretty badly. So
yeah.
But it's rare.
One of those drops.
Yeah.
Yeah.
I mean, it happens quite a bit.
All right. Well, let's wrap it up. It won't be this long before we do another one.
Anytime you want. I love to do it. Always fun talking with you.
It is. Yeah. Let's see how this next week plays out. So I'm thinking green this week. And then I'm going to be looking to go short. I'm going to stay on that channel down. You thinking green the whole week, one day? If you had to throw that dart, what would you think?
Well, Dom's talked about here. Does a hot CPI move the market? If you look at the last two readings of CPI and PPI has been up 4 months in a row, increasing. CPI has been up as well, I think 4 months in a row. So I think you're looking at a Monday, Tuesday up. I think Wednesday will probably hesitate, depending on what that CPI number is. I think it's CPI and PPI numbers are what's going to drive these markets over the rest of the week. But keep in mind, Friday is also your monster week. This is the kickoff to earnings season. You got JP Morgan, Citigroup, BlackRock, all reporting on Friday. That's really what I'm excited about. I think inflation is going to come out a little hotter than expected, personally. That may have an impact to the downside for the equity market. So I think you're probably going to get a first couple of days of the week up, which I'll look to trade that bounce. If we come up into supply zones on some of these indexes, I'm looking to go short and capitalize on the next leg to the downside.
That's right. I always call it it used to be great with Powell and Pelosi. I call it the volleyball play. You got to set it before you spike it. Like I just want to see the position get set up and then they just hammer it down.
Soft little push up. Do it.
Everyone's like, oh, look, we're bullish. I'm like, I am going short because I've seen this move 1,000 times.
I'm ready for it. Bring it on.
Yeah. So I'm hoping we get something like that. If that plays out on Wednesday, that'd be perfect. Let me just get that peak. Let me just pad these walls and then just send it. So
I saw who asked about Costco. Crisco says, did Costco go to good demand? Look, off the news today, just that crazy sell-off that it had. I actually was looking at selling some puts at that demand zone you're talking about, which is right around 545, 547, somewhere in there. I didn't pull the trigger. It was just too much for me. And I was like, I'm going to hold off on that one. The premium wasn't that great as well on Costco, so I decided not to do it.
Man, look at the zone it held. I completely missed this one.
Yeah. Right.
I'm trying to see we went right through it. I guess this is the 4-hour zone. So
yep.
That would almost tag the next one.
I know, it's crazy. It was a pretty aggressive move, but it is what it is. And I love Costco. I'm addicted to Costco, so I really can't say much there. But I did not make a trade on that one. I did look at it this morning. I actually had the option chain up and I was clicking on it. Like the premium just wasn't there. It wasn't enough for even in the face of all that pain in Costco today. I had to pass on it.
Oh, wow.
All right, Don, I got to run. Thanks for having me on. I do appreciate it. Always fun chatting with you. For those that want to, for those that are new to my channel, I know a lot of people names here are mine, but for my group, Don does a bunch of regular stuff as well. For those of you who might be new to me, I host a show Monday through Friday on YouTube as well under Trader Merlin. So feel free to join me there. And then we'll probably do more.
Yeah, sure.
Sounds good. Well, you have a great date night tonight. Do something fun.
Yeah. Yeah, and then what are you doing tonight?
I'm going to go to the dog park right now because the dogs are barking, and I got to get out of here. I usually go at 3:30, but they're just like, so I'm going to the dog park, and then I will I don't know, taking it easy tonight. Got Halloween decorations over the weekend. Maybe I'll send pictures of my Halloween decorations.
You definitely should. All right. So everyone else, you'll see me again. That's Trader Merlin. So just type that in on YouTube. You'll see me Sunday after Futures Open, and we'll see you all then. Have a good one.
Take care, everybody.